Okay, we're going to talk a little bit about what moves I'm going to make in portfolios for clients for the month of April. Not a whole lot of changes for the most part. The only thing that we're going to be doing is adding back some international stocks. Just to give you a quick rundown of how I manage the money for equities. And when I say equities, I mean stocks, both US and international, commodities, and real estate investment trusts. So for the more volatile asset classes, I watch the 200-day moving average. When the asset breaks below the 200-day moving average and the trend of the 200-day moving average is kind of sloping negatively, I'll get out. But then when it breaks up past that, we'll get back in. And in the previous months, past few months, basically since probably August, September, we've been out of international stocks. We've also been out of commodities. We're still going to be out of commodities, but we are adding international stocks. And just to give you kind of a quick view of why. So this first holding is the Vanguard Pacific ETF. So this is invested in developed markets in the Pacific region. So you're looking mostly at Japan, Hong Kong, Australia, New Zealand. The red line here is the 200-day moving average. So in the past, essentially about a month, it's had a pretty decisive move up through the 200-day moving average. I probably should have gotten in a couple of weeks ago. I just wanted to see. I was kind of thinking the little move down here, but it bounced up from that, so that's good. It shows there's some good strength in this holding. So we're going to add this position back into the portfolio. We're also going to add in the Vanguard Europe. So this is developed markets in Europe. This one isn't quite as strong of a move. As you can see, you still kind of have a negatively sloped 200-day moving average. And it's basically just gone above the 200-day. So it's not as convincing as the VPL or the Vanguard Pacific, but I think, it's gotten through there and it's kind of been holding it for a little while. So we're probably going to add that back in as well. And sticking with that international trend, we finally started to get some movement up in the Vanguard emerging markets. A lot of this could be China driven. China could be a little bit of a bubble. There's been such a move lately. But again, it's above the 200-day moving average. Slope it's not negative anymore. It's kind of flat. So we're going to add that back in. So those are really only three moves. We're going to be selling some short-term bond funds and adding back in the international equities. If you've been watching any of my webinars in the past few months, you'll notice in the longer term, I do like international stocks much more than I like the US. This looks at the CAPE, or cyclically adjusted price to earnings valuations for many countries. And you can see a lot of the countries in emerging and Europe here are trading at pretty decent valuations. And when you look at the US, it's trading at a valuation of 27, which is extremely high. So longer term, I do like international stocks better than US. Who knows what's going to happen in the short term, but at least long term, I do like it. The other nice thing about international stocks right now is the dividend yield's much better. Right now, if you look at the S&P 500, which is representative of the US market, dividend yields about 1.9%. When you look at the internationals, we're talking emerging markets at 2.8, Pacific at 2.5 roughly, and then the Europeans at 3.4. So we can also pick up some dividend yields, a little extra yield on these investments. That kind of goes along with what I've been doing recently, is focusing on more interest rate sensitive vehicles, trying to pick up more yield. I think we'll see yield, even though yields are low historically, I think yields are going to kind of be a bulwark of the returns going forward. I just don't see US stocks appreciating much. And I kind of see interest rate sensitive vehicles sort of holding their own and not losing value. So we're in longer dated bonds, trying to capture more yield. We're in real estate investment trusts, mortgage REITs, which are highly interest rate sensitive, and in master limited partnerships. The international stocks are probably going to be a little bit along those lines as well. It's going to give us a little bit better yield. Other reason I kind of like international stocks is the dollar has been very strong, and when the dollar is very strong and the other currencies, such as the Japanese yen or the euro, are losing value relative to the dollar, that's typically pretty good for stock markets in the short term. So those are the moves we're going to be making this month. If you would like more information, you can always go to our website, picketfencefinancial.com/education. You could visit our Facebook page or our YouTube page. Just type in Kirk Kinder and that'll take you to the YouTube page. Thank you.